All right, let's dive into the wild, fast-paced world of small-cap stocks. You know, these are the companies that can deliver absolutely massive returns, but they also come with some pretty serious risk. And that leaves us with a huge question.
I mean, with thousands of them out there, how do you possibly separate the real opportunities from the ones that are just going to blow up in your face? Well, that is exactly what we're going to break down today. We're going to build a framework to help you navigate this really exciting market. Let's start with the basics.
So what is the big deal with small caps anyway? It really comes down to this intense duality. You have the potential for explosive, life-changing growth that you just will not see in larger companies, but it's paired with a level of volatility that honestly demands a rock-solid plan.
And the reason they can move so fast is their low market capitalization. That's just the total value of all of the company's shares. Since the whole company is valued at less, it takes way less money flowing in to make the stock price jump. I mean, a single piece of good news can literally send a stock soaring. That's the dream, right? So how do we hunt for these opportunities in a smart way?
Okay, this brings us to the absolute core of our explainer, a simple 5-point framework. I want you to think of this as your pre-flight checklist before you even think about putting money into a small-cap stock. It's designed to filter out all that noise and get you focused on the higher quality setups. The trick here is to look for all 5 of these things together. I like to split them into 2 groups. You've got your safety checks and your growth signals. The safety checks are things like good volume, so you can actually get in and out of your position, and a real product or revenue, which, separates a real business from a complete fantasy. Then, you look for the growth signals, a strong catalyst that's going to get people interested, a low market cap that gives it that room to run, and clear technical levels on a chart to help you time your entry. Let's actually apply this checklist to a few real-world examples. First up, we've got AVA Technologies, or AEVA. We're going to call this one the Tech Innovator. This company is all about cutting-edge technology, and that's exactly where its big potential catalyst is hiding.
So what does AVA actually do? They are deep in the LiDAR space. And if you don't know, LiDAR is this amazing sensor technology that lets machines see the world in 3D. It's absolutely essential for self-driving cars, for advanced drones, for robotics, and AVA is right at the forefront pushing what this tech can do.
So why does it fit our framework? Well, it's got clear potential catalysts, like landing major partnerships with big car companies. The whole LiDAR sector is starting to get hot again, which gives it a nice tailwind. And of course, its low price means any little piece of positive news can cause a really significant move. And now for our 5th point, the technicals. When you look at the chart, you'd be watching to see if the stock can hold support. Think of that like a price floor where buyers tend to step in. But the real action, the breakout, is when the price punches through resistance. That's the ceiling where sellers usually show up. And you want to see that happen on a big spike in trading volume. That's the signal that tells you things are getting serious. Okay, next up, let's look at a totally different kind of small cap. We'll call this one the revenue grower. This is Genius Sports, or GNI. While AVA was all about future tech, Genius is about something you can see right now, tangible financial growth.
Genius Sports is basically the engine running behind the scenes of the entire sports betting world. They're the ones collecting and sending out real-time data from games to companies like DraftKings and FanDuel. They are essential plumbing in an absolutely booming industry.
GNI is a perfect example of that real product or revenue box in our framework. It has actual growing sales, it has long-term contracts with huge leagues like the NFL, and it has a massive catalyst with legal sports betting just exploding across the US. This isn't just hype, it's a real growing business.
For our final example, let's head into a sector where things can get really wild, biotech. This company is driven almost entirely by news and events, Ginkgo Bioworks, or DNA. Let's call it the biotech catalyst. This is where volatility can be at its most extreme.
So, to put it simply, Ginkgo Bioworks is kind of like a programming platform, but for biology. They engineer tiny microorganisms for very specific jobs, helping clients in industries from pharma all the way to agriculture. Yeah, it's incredibly complex, but the potential is just enormous. So why does this one fit our framework? First, the catalysts are huge. It lands major government contracts and partners with giant pharmaceutical companies. Those are massive validation points right there. And just like our other examples, its cheap stock price means any news can trigger a huge, outsized move. And this really hammers home the importance of that catalyst idea. For a stock like Ginkgo, you're not just watching the company itself, you're watching the entire biotech sector. Announcements about new government funding, updates on a partner's clinical trial. Any of these things can act as a powerful rocket fuel for the stock.
So this table really ties it all together, right? We've got three very different companies, but we use the exact same framework to analyze each one. Ava is our tech play, driven by partnerships. Jenny is a growth play, driven by pure revenue. And DNA is that high-risk, high-reward biotech play, driven by R&D news. Three totally different stories, one consistent approach.
So we've seen the framework, we've seen how it applies, but now we need to talk about the most important part of this whole thing, understanding the balance between that potential reward and the very, very real risk.
Look, the goal of this framework was never to give you a list of hot tips. It's to give you a way to think, a process for filtering opportunities for yourself. These examples show what a setup with potential can look like, but I gotta be clear, success is never, ever guaranteed.
Please, if you take away one single thing today, let it be this. Small caps can be incredibly rewarding, but they are unforgiving. Their speed is a double-edged sword. Never ever invest money in this space that you cannot afford to lose completely.
So now you have it. You have a structured way to approach the small cap market. You have the 5 rules of the game. The question is no longer what should I buy? The question is how should I look? So where are you going to start your search for the next compelling opportunity?